Friends, greetings. Another day, another topic. But before I start or continue my discussion with you all, humble request, my YouTube channel Alok Kumar India. Please share, like and subscribe for the benefit of all, not only yourself, your friends and near and dear ones also. Friends, today's topic I am taking something different, totally different, very relevant for ourselves. Not only individually, but socially also. Today I am going to discuss on banks. Banks, with what purpose they should be existing in our society. What are the purposes of banks and what purposes they are fulfilling today. With what purpose banks came into existence for human beings like us, for any society in our country, not only in our country, across the world, but I am going to focus my discussion on Indian banks or Indian public and banks. So today's topic I am going to take banks. They are the reason for our savings. We want to be richer or we want to be wealthy with the help of the banks. We think that with banks we can increase our savings. We can increase our potential. We can increase our potential to earn more. Through different services from the banks, we can be more reachable to our customers, to our near and dear ones, or to our relatives, placed not only locally, but far off places also, far away places also. But are banks fulfilling those services or those aspirations of ourselves as an individual or as a society? So today's topic, what I have taken today is, are banks exploiting Indian public with government active consent and support? Why I am thinking like this? Because when I am presenting you or when I am taking you through the discussion today, you will be sure or likely to be sure that what I have written as topic for the today's discussion proves to be correct. What banks should have been a source of savings, being wealthy, being richer for each one of us. But instead, it is having a hawkish eye on our savings or on our balances, and they are trying to recover all the balances, all the savings for their own benefits. And Indian government is actively supporting or consenting for all these activities, including Reserve Bank of India also. So let us continue, let us start our discussion for today. And let us make it purposeful and let us make it all inclusive also. Let everybody be known about it, and that's why I'm urging you, requesting you to just share it also, subscribe and share also. Banks are crucial, important and a lifeline of any society and country to ensure a distribution of financial schemes and benefits by employing resources vis-a-vis social economic situation prevailing in the country. Whatever socio-economic situation is prevailing in our country, with that in mind, every individual, every family, every society tries to use or avail the services of banks. Their role is extremely important for an all-inclusive growth and development. But the current scenario being discussed today, as we are discussing today now, does not bode well for the common Indian public. With the help of this discussion, you will also be led to believe that banks, for what they should be existing, instead they are existing or working for something else. Last few years, the Indian banks have started doing business different than what is expected from them. Leave alone private sector banks, even public sector banks have become hawkish and money hungry in their approach while charging public for banking services. Despite being a poor country with per capita income of rupees 1,30,000 only, banks are charging heavily for services that were so far being provided to make Indians financially inclusive and bankable. Actually, if you see, till certain years back, few years back, these banks were not having any approach like this. But now for the last 5-6 years or 7 years, particularly post 2014, the banks have become money hungry, particularly from the same customers for whom they are existing or who they need to service. Being a socialist democratic welfare country, banks were nationalized with very lofty ideals to bring everyone into the mainstream of growth and development. But the reality today just confirms the opposite. Banks are charging fee for the following services broadly, only an indicative list. The list that I'm sharing today for what they are charging, it is just an indicative list. The list may be exhaustive. There may be certain other services for which there is no mention here. But some of the services for which banks are charging, they are bank account statement, debit card issue, debit credit card swipe, PIN generation, ATM transactions, SMS updates, demand draft issue or cancellation, non-maintenance of minimum average balance, dishonoured checks, cash transactions, checkbook facilities, stop payment facilities, NEFT, RTGS, IMPS transactions, international cash transactions, failed ECS transactions. ECS transactions means, in some kind of payments we activate ECS. ECS means electronic clearing system. It automatically deducts from your account every month a certain amount for the purpose that you have activated it for. So these are called ECS transactions. In case of failed ECS transactions, account closure, etc. Now these services, or the list of these services, are just indicative. This does not complete the full services. And banks earlier in the beginning, they were not charging on all, but now they are charging for many services. So before I start, or before I go on discussing about all these issues like what we are discussing, let us have the discussion on three most important aspects. First of all, what the history has been, how the charges or how the banks have been operating in our country since independence. Then from history we will go forward to discussing the facts. What facts are prevailing in last 10-15 years, and then combined together with the history and the facts, then we will move forward to have a discussion. I have given title of side effects. Side effects will have coverage or will have full discussion on the aspects that banks should be doing or fulfilling, and aspects that banks are doing or fulfilling which they should not be. So that is why what they are doing is okay, but what they are not doing, they should be doing. These are all under side effects. Now history, what has been the history for the banks in their operational or in their functionalities? Now before 1999, banks were charging mostly uniform fee for all banking services. Bank charges were normally nominal and mostly symbolic. Post 1999, banks started charging differently as per their discretion and services on offer. From here, charges started increasing. Actually, till 1999, banks were not very much focused on collecting charges. They were charging it symbolically for certain services, for very minimum services, that too just as a routine without any focus on it. But from 1999 onwards, they started increasing the services or service charges. Now, in 2006-2007, RBI constituted a working group with representatives from banks and consumers to take a decision regularizing charges on banking services on some ranking system of services from various banks. The group submitted its report in September 2006. A group was formed in 2006-2007 April, and they submitted their report in September-October 2006. Detailing the kind of charges, the kind of services, and how they should be charging. And the committee consisted of representatives from banks also and consumers also. Till March 2009, bank charges continued to be normal. Bank charges started increasing with effect from April 2009. Bank charges were never in priority for banks to generate additional income. Till 2009, bank charges on services were never banks' priorities. The real increase in bank charges took place with effect from April or October 2014. Actually, it started from April, and in October 2014, it became very high, or in comparison to what they were existing, it became very high. So effectively, you can say that from April or October 2014, the real increase in bank charges started taking place. Now the bank charges are a major source of revenue or income for banks, including public sector banks. Mid 2000s means taking from 2004 or 2005, banks sanctioned or started sanctioning big chunks of amounts as loans or credits to medium, big and very large industrial houses or establishments, anticipating continued economic growth, thinking that economy of the country or economic growth in the country is going to be positive upward. All banks started sanctioning huge amounts as loans to not only to big or large, even medium and small industrial houses also. Post 2008, due to global financial crisis, recession set in, resulting into losses for everyone. We all know what happened or what started happening with effect from 2008 beginning itself. Lehman Brothers, housing collapse, many things were there, and it started from United States of America, USA, and it spread all over the world, and ultimately it became to be called global financial crisis. And from there, the recession that set in, it started causing huge losses to most of the establishments, industrial, individual, family, society, or whatever you call it, even national also, countries also, economies also. By 2009, these loans started turning into NPAs, forcing the central government to recapitalize banks for their survival and smooth operations. Because of the crisis, global financial crisis in 2008, and loans or advances turning into NPAs, central government had to force itself, or they started recapitalizing the banks for the loss in terms of loans or in terms of the non-performing assets that started taking place since 2009. And now the figures of NPA or the NPA itself has taken a very big crisis, the nature or the role of a very big crisis in the current times. We will understand all these things. This has been the history of the banks or operations of the banks for the last 10-15 years. Now facts, what are the facts or what facts say? What do facts say so far as last 10-15 years are concerned? The gross non-performing assets or GNPA facts are given below. If we start from 2009, as I was just telling you now, that from 2009, central government or RBI, Reserve Bank of India, started recapitalizing banks in big numbers, and it started from 2008-2009. March 2009, the total non-performing assets 44,000 crores approximately, that was 2.3% of total advances or loans. March 2011, it became 71,000 crores, 2.36 of total advances. March 2014, it became 224,000 crores, 3.8% of total advances or loans. Then March 2017, it became 3 times jump, 710,000 crores, and the percentage became 9% almost approximately of total advances. Then March 2009, it became 800,000 crores, 9.3% roughly of the total advances. And March 2020, if we talk about figures as on March, it became 900,000 crores, 900,000 crores, which is around 9.5%. But last 2 days back, or just 2 days back recently, Reserve Bank of India, in its latest report, a recent report, has informed or shared that the non-performing assets figures or NPA figures as on March 2020 is around 8.5%, roughly 850,000 crores. And depending upon the circumstances that are unfolding due to demonetization, GST, and corona-induced lockdown, the situation is going to be worse as on March 2021, that means end of this financial year. And even in conservative circumstances, the non-performing assets will be around 13 to 14%. And if it does not contend, if it is not contend of, or if it does not maintain the limits, then it may go beyond the 16, 17, 18%, also roughly around 20 lakh crores. And it is going to be a very big problem for the Indian economy, for the Indian banks, for the financial status, balance sheet of the Indian banks, and Indian government will be under tremendous pressure to not only enable banks to have capital, to have their balance sheet, sound operations, their survival, their existence, their smooth operations, everything. And the picture that is unfolding or that is likely to unfold is a very troublesome or worrisome scenario for banks. But these facts, how they have developed to this extent. Banks were created, or banks were started with the sole purpose of providing services to the people, to the individuals, to the families, so that everyone becomes wealthy, everyone becomes richer. They should be at home, they should sleep at home peacefully, keeping their deposits, keeping their incomes in banks, banks operating purposefully, and the savings or the benefits of the bank or the bankable services are insured for the large masses of the society. Everyone in the society, even the last man in the society, not only in the city areas, urban areas, even rural or remote rural areas also. But are banks doing those services, or are banks fulfilling those services? These are the facts that we need to discuss, and then we will move forward to the side effects topic also, where we will have a critical analysis or critical understanding of the bank's functionalities or operations. Figures as on 31st March 2021, that means NPA figures, non-performing assets figures, is estimated, as I just told you, around 20 lakh crores due to bank and Mudra non-performing assets. Mudra loans were sanctioned around 8.5 lakh crores. Then banks' normal loans have been sanctioned. Then these developments are taking place, what we are experiencing for last 6 months particularly, and then before that also for last 2 years, demonetization, GST and corona-induced lockdown. NPS due to corona lockdown. Now these GNPA figures or non-performing assets figures are outcomes of combined effects of, as I was telling you, demonetization, GST and corona-induced lockdown causing deadly trap for the Indian economy. 85% of total NPAs belong to public sector banks. The central government did capital infusion or recapitalization into public sector banks between April 2016 and March 2020 to the extent of rupees 4 lakh crores. Last 4 years, 4 lakh crores of capital infusion, recapitalization to banks. Despite this, non-performing assets are beyond control, any control rather, and banks still need huge sums for survival, for smooth operations. An approximate amount of rupees 30,000 crores between April 2016 and March 2020 have been collected by banks towards non-maintenance of minimum average balance by customers, consumers. You know, this, as I told you now, banks started becoming hawkish or money hungry so that they can collect money in the name of the services that they are providing to individual or social or group consumers. And this 30,000 crores is just on one account. What is that account? Is minimum average balance not being maintained by the consumers or individual customers. Actual figures collected towards charges for sundry other services are not available. This is just some of the figures that I have got my hands on and that I am sharing with you all for the benefit of you all. Now let us move forward to side effects. For what banks should have been functional, for what banks should have been in existence, and what actually they are doing. Are they providing those services, those benefits to the individual customers, to the families, for what they are existing, or they are just operating to have more and more income at the cost of the same consumers for which they were supposed to be existing? So we will have a critical analysis in the name of side effects. Now side effects, what are the side effects? Banks appear to be cruelly exploiting helpless, hapless customers at a time when incomes are falling continuously and opportunities to earn are also disappearing fast and furiously. I hope you agree. The kind of scenario we are seeing around us, opportunities to earn are dwindling very fast. People are not having any work, any source of income, or any activity due to which they can have even slightest income or slightest form of revenue in their pocket. To cover up its losses somewhere else, banks are sanctioning loans, they are turning NPAs, banks are having very high overhead costs, banks are having their many loopholes, leakages, which they are not able to control, which they are unable to control. To cover up its losses, that means to cover up their losses somewhere else, Banks are taking steps detrimental to the economic well-being of country and its countrymen. And the Indian government and the Reserve Bank of India, what they are doing? They are actively supporting, actively consenting to all the hawkish or money-hungry activities of banks. Through their actions, banks are defeating the very purpose of nationalization, their existence, and the sacrosanct tenets of the Indian Constitution also. Robbing Peter to pay Paul. There is an English phrase, English adage, English idiom, robbing Peter to pay Paul. Approach has been adopted by banks for the last few years. Banks are charging heavy penalties from hapless, helpless customers in the name of banking services, whereas they are sanctioning huge loans to industrialists, compromising facts and rules, turning them into NPAs, causing huge financial losses. In order to sanction big loans to big, large or medium industrial houses or industrial establishments, they are tweaking all the terms and conditions. They are overlooking many other things, and they are sanctioning loans, ultimately turning into NPAs. And how they are covering all these things? They are covering through charging fees from the hapless, helpless consumers like this that we are discussing now. RBI, Reserve Bank of India, and central government are hand in glove with banks charging penalties on customers. Without their active consent and support, banks cannot charge huge amounts for various banking services from customers. Individual income tax as direct taxes. There are two kinds of taxes, direct taxes and indirect taxes. The individual income tax as direct taxes, and goods and services tax, corporate tax, several other taxes like wealth tax, assets, on assets, investments, fuel like petrol, diesel, VAT, value-added tax, or other purchases. There are many other indirect taxes are what is being paid by taxpayers to the central government. Taxpayers means even poor taxpayers also, or taxpayers who don't have much money in their pockets, who don't have sizable money, not even sizable, small money also in their pockets. Everybody, poor, lower middle class, upper middle class, rich, everybody pays taxes, whether it is a direct tax or an indirect tax, whatever taxes. So all these taxes are being collected by central government. From these collections only, rupees 4 lakh crores have been given to banks as recapitalization during last 4 years. Additionally, rupees 30,000 crores have also been again charged in the name of banking services fee. Now at one point you are charging banking services fee, and at one point banks are charging or collecting banking services fee, and at the same time central government and RBI combined together, they are recapitalizing banks with such huge amounts. Now central government is always recapitalizing banks with huge sums every year, as can be seen from the aforesaid figures. Same taxpayers are again charged for banking services by the same banks. This means that taxpayers are being charged not only twice but from all corners. They are at no end. Banks are collecting money from all the sources from the same taxpayers or customers, citizens and residents that are availing the services of banks. At one point they are being recapitalized by central government, and on the other they are charging services fee for the banking services that they are providing. So banks are benefited financially, gaining every time from all corners, and the hapless, helpless consumers are paying for the bank's failures or bank's lapses. What an impractical and unethical practice that is prevailing in India, and central government and RBI both are actively consenting and supporting these activities of banks, because they are themselves supporting banks financially for their own wrong, faulty, unethical and irresponsible decisions in sanctioning loans and advances to big industrial houses, turning into NPAs. The central government and banks are unconstitutionally penalizing citizens come taxpayers financially, causing penury to same hapless, helpless taxpayers. The gross non-performing assets or non-performing assets, whatever you call it, will be approximately 20 lakh crores, roughly 18 to 20% of total loans or advances as on March 2021, due to combined effects of demonetization, GST Act and Corona-induced lockdown. Besides, Mudra loans and MSME loans sanctioned under central government instructions are also turning into NPAs fast and huge. Total Mudra loans paid and sanctioned are around 8.5 lakh crores. Actually, by the end of December 2019 or January 2020, already around 20 to 25% of Mudra loans had already turned NPAs. Same things are going to happen with MSME loans. Many big loans sanctioned to big and large industrial houses for last 10-15 years are handiwork of political influencers also. That means last 10-15 years, whatever loans are being granted or sanctioned to the industrial houses, somewhere down the line it appears political influencers' role is also there. Maybe ministers, maybe MPs, MLAs, people around ministers or whatever. And due to which banks are sanctioning huge loans to all these industrial houses. Now, political powers that be perhaps are playing decisive and guaranteed roles in getting these loans sanctioned and paid, and now NPAs also. Now, the same political influencers group, maybe ministers or people around them, MPs, MLAs, whatever you call it, or political powers that be, they played their decisive role, guaranteed role in getting these loans sanctioned, turning NPAs. And now they are playing active role in these NPAs getting addressed, maybe written off, maybe paid, maybe discounted, maybe not paid, or whatever, in whatever form they are being addressed. The roles of the political influencers are again possible or likely to be played, and thus ensuring benefits for everyone, not only political influencers, but the industrial houses also. These are all national resources, and national resources are being abused, misused this way. In rich foreign countries having higher per capita income, the interest rates on credit cards issued are between the highest range of 36% to 42% per annum compounding. It is understandable to have so high interest rates in these countries because they are rich countries, they are affluent countries, they are wealthy countries. Unlike these rich, affluent, wealthy countries, India is largely a poor country, and under no circumstances the interest rates on credit cards can be so high. It should be never ever more than 18% per annum under any circumstances, more so in the current problematic situation, the current situation we are experiencing around us, how people are losing income, opportunities to earn are getting lost. People don't have any revenue, people don't have any savings, people don't have any sources to earn revenue or income for themselves, for their families. Under any circumstances, the interest rates on credit cards should never be more than 18% per annum, particularly for our country. Banks have dual recovery policy depending upon consumers or customers' profile. For big consumers, for big customers, it compromises its stand and rules, writes off, restructures by fresh loans, tweaks NPA conditions or NPA recovery conditions, terms and conditions, etc., 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 whatever you call it. There may be list may be endless. Around rupees 3 lakh crores have already been written off in last 4 or 5 countries. And for a small consumers, for a small customers, what is their objective or how they operate? These banks operate. Banks adopt strict approach by sending notices, strict notices, recovery notices, by sending recovery goons, attaching assets, forcing suicides, seeking possessions of their assets, properties or whatever. These kind of dual recovery policies are being adopted by banks, different for different consumers. The amalgamation of public sector banks, banks are being consolidated, they are being merged into fewer entities. Last 1 or 2 years, 12 banks or 14 banks are perhaps merged into 3 or 4 banks, 3 groups. And these amalgamations are happening, and still the talk is going on for much more or for certain more amalgamations or merging together of different banks. The amalgamation of public sector banks needs to be done keeping consumers at the core and ensuring maximum benefits or cheapest services with easy access to the consumers, to the customers. Banks may also become cost effective in their operations if they are able to address the core, and the core is the consumer or the customer. Present amalgamation or merging activities being done is solely aimed at minimizing cost for banks without overall objectives. The overall objectives, that means the objectives to provide easy, smooth, hassle-free services to the consumers, not only in city or urban areas, but in the rural areas, remote rural areas also. Until and unless you ensure this, you address the issues in providing services, easy and active services easily available to the consumers, to the customers, the costs of the banks will not go down. There are many leakages and there are many loopholes which banks are not able to address. Banking services through ATMs, automatic teller machines, need to be upgraded urgently. They should replace most branch banking services. In India, banks are not utilizing ATMs the way in foreign countries banks are utilizing. Actually, ATMs must be empowered or enabled to replace many of the branch banking activities or services. But it is not happening here. That is why you see, if you go around, you have to run from pillar to post or run from ATM to ATM, ATM to ATM to get the retail services through ATMs. Most of the banks are not able to manage ATMs professionally, efficiently. It is feared that public sector banks do not attach too much of a role and importance to ATMs, leaving them unattended, unserviced, and badly malfunctioning, resulting into a very poor service to the consumers. And not only they do not provide proficient, professional, efficient service to the consumers, customers, at the same time they are charging unethically very heavy penalties from the customers, and they are expecting capital infusion from the central government also for the losses turning into NPAs. Now, RBI or Reserve Bank of India has a big and definitive role to play in all the above. It must rise to the challenge and the occasion that is presenting itself or that is prevailing before each one of us. Hope that the Indian government and banks understands their public-centric role and do justice to their role, to their existence, to their functions. Hope friends, the discussion was purposeful, discussion meant for you, or discussion fulfilled its purpose. And the topic for the today, as I told you in the beginning, are banks exploiting Indian public with government active consent and support? I hope you believe in this, what I am telling just now, what I have told you as the topic, what we have discussed today. Now let me conclude here. All the best friends, have a great future ahead. All the best, thank you, thanks a lot.